And in business news, the Monetary Policy Committee of the Central Bank of Nigeria has unanimously voted to increase the monetary policy rate to 27.25%. This was disclosed by the CBN Governor, Mr. Olayemi Cardoso, after the committee's meeting held at the CBN's headquarters in Abuja. Uloma Oyemachi reports.
At the conclusion of the 297th Monetary Policy Committee meeting of Nigeria's Apex Bank in Abuja, Governor Olayemi Cardoso announced the new rate of 27.25%. This represents a 50 basis point increase from the previous 26.75%, which had been set in July 2024.
The committee was unanimous in its decision to further tighten policy, raise the MPR by 50 basis points to 27.25% from 26.75%. Raise the cash reserve ratio of deposit money banks by 500 basis points. Retain the liquidity ratio at 30%.
The governor also noted that the committee is closely monitoring inflationary trends and emphasized the bank's commitment to stabilizing the nation's economy.
The MPC noted that even though headline inflation trended downwards due to a moderation in food inflation, core inflation has remained elevated, driven primarily by rising energy prices. We are resolute in our focus on bringing down inflation, and we will use all the tools in our disposal to ensure that that happens.
This meeting also marks Governor Cardoso's one-year anniversary in office. He expressed his continued dedication to earning the trust of Nigerians.
We are fully engaged in getting ourselves out of unorthodox means of running the central bank. We'll moderate prices as we have begun to see the results, and will eventually result in price discovery on the foreign exchange side. Thank you.
The next Monetary Policy Committee meeting is scheduled for November 24th and 25th, 2024. Uloma Oyemachi, TVC News, Abuja.
The Nigerian Maritime Administration and Safety Agency has been challenged to utilize the 0.5% stevedoring levy remitted by the terminal operators for the training of dock workers. This call came during the recent commemoration of the dock workers in Lagos convened by the Shippers Correspondents Association of Nigeria. Ifunaya Eze reports.
That fund should not be sitting in the master's account. It should be used for the purpose that it's meant for.
At the event, the chairman of the Seaport Terminal Operators Association of Nigeria, Princess Vicky Hastrop, alongside other key players in the maritime industry, expressed concern that the Nigerian Maritime Administration and Safety Agency has yet to deploy the 0.5% stevedoring levy for its intended purpose, training dock workers. They highlighted that despite the substantial resources available, the agency has not fulfilled this obligation.
Each of the terminal operators, we do train them in a minimal level, to the level where we could. But the biggest training lies with NIMASA, because terminal operators do contribute 0.5% of stevedoring deals to NIMASA. And, we expect that NIMASA will use this fund for the purposes that which it's meant for, and that is training of dock workers.
This is about the authorities taking over what needs to be done, and having done what needs to be done, releasing them to people who will now employ them.
Industry stakeholders emphasize that up-to-date training for dock workers is crucial for improving working conditions, boosting safety standards and enhancing productivity at Nigeria's ports.
And we should continue to invest in their training and in safety standards to ensure that their productivity improves and that our port is made more and more competitive.
They need a proper technical school where they will have all the facilities that they could use for this training. We can build those facilities. It is government that has the responsibility to build such facilities, those training schools.
They further pointed out that delays in renewing the licenses of terminal operators are negatively affecting port operations, calling for immediate action to resolve the issue. Ifunanya Eze, TVC News, Lagos.
The Chartered Institute of Directors Nigeria has called for good governance practices across all sectors of the Nigerian economy. The professionals said this is a catalyst for economic recovery, growth and development. President of the Institute, Mr. Tijani Borodo, made the position at a press conference ahead of its Institute's 2024 Annual Directors Conference in Lagos. Mr. Borodo noted that the failure of corporate governance has contributed to Nigeria's economic challenges, especially in activity of state-managed oil refineries and other sectors of the economy.
This underscores the critical role that corporate governance plays in advancing economic transformation and national development. In the face of ongoing economic challenges, it is essential that we recognize how sound governance practices foster accountability, sustainability, and innovation within our organizations, in particular, and our nation in general.
The committee looked at what is it that's going to be on everybody's minds today. It's about the recovery. It's about growth. Where do we go from here? Now transformation is happening, and it might not be sitting well with a lot of the businesses. How do we start to talk about what is needed as far as governance to make that happen? See, governance brings sustainability and growth, because you're taking away the biases and you're bringing in those things that is pertinent to growing a business and an economy.
Wrapping up business news, positive transactions continue to move at the nation's stock market, where investors seem to be making average incomes from their investments. If you get up reports on markets, we'll be back with sports news.
Investors at the stock market kept good eyes on banking stocks, putting their monies on many of those banks that have already moved to recapitalize their bases. Huge trades went through the stocks of First Bank Holdings as the group enjoyed nearly 10% gain advantage, coming on the back of renewed interest in the banking group. Fidelity and Wema Banks were equally strong in their performance capacities, while ABC Transport and LLX also traded strong. Oil and gas company Oando traded downward, losing a 10% price value on sales pressure by investors. Okomo Oil Palm, running plantations in Edo State, crashed its price value above 9%, just as Keveton Aviation, Multiverse and Fitson Pharmaceuticals left the markets with losses. The trade volume at the close of business was more than 900 million units of shares, with the market value above 11 billion naira. Analysts in the market think that trading in key sectors will start ticking upward as many fund managers want to face the last quarter of the year. If you're on TVC News, Lagos.